We've covered the Office of Tax Simplification's first report into CGT reform in Techlink. There's a bulletin, a video, and a link to the OTS report itself. The suggestion that probably gained the greatest amount of publicity was that suggested that capital gains should be taxed at income tax rates. So that would mean capital gains being taxed at 0, where they're exempt, as they are now, or at 20%, 40%, or 45%, compared to the current system, which would tax capital gains, which does tax capital gains at 0, at 10% or 20%, with the special higher rates for gains made on residential property and carried interest. So that's one thing. To be fair to the OTS, in relation to that suggestion, they did say that we should really take account of inflationary gains and give some measure of relief for inflationary gains. Something else they said, and I really love the heading that was given within the report to this particular aspect, and it was called the lumpy nature of gains. That was the actual heading. What they were talking about there was it was also unfair that some people who would otherwise be paying a particular rate of income tax, bearing in mind we're talking about capital gains being taxed at income tax rates, so those people would be unfairly subject to a higher rate of tax because in that 1 year they realised the gain, and that the whole of that gain, which had accrued over a number of years, was lumped together with their other income and taxed at a much higher rate than would otherwise be paid by that individual in the year. They suggested a way around that, a way to combat that unfairness, would be to average the gain over the number of years that the asset had been held and the gain had accrued. They also interestingly noted that there was a precedent for this in relation to the taxation of gains made under investment bonds. Now that's an area, of course, that we all know as top slicing relief. So that's interesting that they actually throw out there a recognition of top slicing relief, and that could be a way to overcome unfairness of lumpy gains if we did have the taxation of capital gains at income tax rates. I would actually remind you, of course, of the incredible power of top slicing relief in relation to bonds when you've had the investment in a bond for a number of years, and then you make that encashment, especially if you can control your level of income in the year in which you make the encashment, and find that the top slice gain, i.e. the gain divided by the number of years the bond has been held or since the last chargeable event, gives you a much lower amount, of course, than the amount of gain that you'd had. £100,000 gains in a bond held for 10 years would give you a top slice gain of £10,000. And it's that amount that determines whether and if so, to what extent you pay higher rates of tax if it's a UK bond. So top slicing relief, incredibly valuable for bonds, remains available for bonds, could be something that we see in relation to capital gains if we have an acceptance of that part of the OTS suggestions for reform, which says, how about taxing capital gains at the same rate as income is? So something to watch out for, something I found interesting. Hopefully you did too. As I said, that Techlink bulletin and video content explains the entirety of the OTS proposals, and we await the second report next year.